Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello friends, looking at oil on the hourly time frame to start. So we saw the oversold bounce playing out yesterday. We had our higher low, higher high, building a base of support. Continued with some strength this morning. We saw a bearish reversal, doji heading into the oil inventory report. And then we saw a bearish reaction, but the bulls bought the dip enough to keep this support. 53.01, you can see we consolidated and bounced off of it multiple times, and although we dipped below it, no hourly candlestick closed below it, and then the bulls recovered a bit from that bearish reaction to the inventory report. So as long as we keep closing on the hourly above 53.01, bulls are still bouncing from oversold conditions to the dump that we saw earlier in the week, and the high of this move so far is resistance of 54.09. So 54.09 and 53.01. But as we look at the daily time frame, the bulls are still holding up just fine. And that is a nice bounce after the dump, still maintaining the key support 52.11. Again, cannot stress that enough. This is the kind of level that you write down somewhere next to your trading station or computer, both being the same thing potentially. And you're just watching it, and you can be playing other stocks and playing oil in other directions, but you know as soon as 52.11 breaks, that's your bear signal. It's a double low of consolidation here, and if it breaks, we're going to see another leg to the downside. So that would be a nice day trade or a swing trade. We'll have to see the magnitude to the move to the downside, but it is a very likely profitable trade to the downside once 52.11 breaks. So we're going to check back in someday in the future and say, there's that break, and there's the move to the downside. So we're watching resistance of 54.09. The high we've seen on this move is up at 55.21. And we'll see if the bulls can continue with higher lows heading back towards that recent high. We look at the weekly time frame, and the week's about to close here. It is a bearish reversal doji at the top of an uptrend. So we need to be cautious and need to be watching for a potential red week next week to confirm this bearish reversal doji. And what I'm seeing on the daily time frame with that double low of consolidation at 52.11 is the potential for a head and shoulders pattern where we would have our left shoulder here, that would be our head, and this would be our right shoulder. So if we were to pull back over the next couple of days back down towards 52.11, then we could look for that potential to the pattern to potentially form here, and that would confirm the weekly bearish reversal doji if that were to play out. But as of right now on the hourly, not getting those signals yet. So pretty much if we lose 53.01, that's our heads up to start watching 52.11. But as long as 53.01 holds, the bulls are still in control on this oversold bounce that is playing out over the past 2 days. So hopefully there's some useful information in there. I appreciate you watching, and we'll check back in over the weekend to see how the week closes out.